Hi, I'm Matt Bell from Sound Mind Investing. If you had fallen asleep on February 19th of 2020, didn't wake up again until the end of that year, and then checked on the stock market, you would have thought, what a wonderful time to be an investor. The market ended 2020 up 18%. You would have slept right through a scary pandemic-induced 34% decline. That took place over the 16 trading days that followed your February 19th bedtime. The market had never fallen that far, that fast. Fortunately, wild swings in the market are not every month occurrences, but they are not uncommon either. In fact, over the past several decades, the market has averaged an intra-year market decline of 14%. That means that at some point during a typical year, the market is likely to fall 14% below its most recent high. That's pretty remarkable, isn't it? It shows how common periods of strong market volatility are. And since we can't just hit the snooze button whenever the markets get bumpy, we have to deal with it and face the occasional fears that are part of being a stock market investor. SMI says it often, investing requires a long-term perspective. It helps a lot to follow an objective, process-driven investment strategy. Even better, to have a written investment plan that includes a statement like this. I know that the market moves through bull market and bear market cycles. I've chosen a strategy I can live with in good markets and bad, and so I will stick with it in good markets and bad. The next time a big market downturn comes, if you feel that old familiar fear and wonder how much worse it may get, pull out your plan and reread it. Remember that market volatility is normal, and remember who you are, a long-term investor, not a short-term trader. Then go on about your life. That's Sound Mind Investing. I'm Matt Bell.